In topic 4, I used to have a different name because I was ambitious to do something more. So, I am going to change the title. I am going to call it, this is only regulatory institution I will talk about in details. I will call that topic 4 Reserve Bank of India. I am going to talk about Reserve Bank of India. Now, Reserve Bank of India, which is the central bank of India, is not exactly like the central bank of other countries, but some functions are same. So, I am going to slowly talk about that and where the differences come. First of all, some question came up long time back in this course that the Reserve Bank of India is a private institution or a government institution. I always knew it is a government institution, but I got the details that in 1949 or 47 it was nationalized by the government. Originally it was founded as a company and then as a normal bank, and then it was nationalized, but some countries have central bank not in the government sector because they do not have a government sector as such. So, anyway, let us talk about the Central Bank of India, Reserve Bank of India. Earlier, I used to call this topic regulatory and promotional institutions, but I found out there is not a lot to talk about, or I may have to expand my notes to include a whole range of promotional institutions. But I found that in case of money market, central bank is overwhelming, our central bank RBI, in terms of regulatory institution which regulates the money market, tells you what to do, what not to do, and promotes things from a development point of view. I will talk about that here in this. So, I found this primarily Reserve Bank of India. So, why not call the title Reserve Bank of India? Not a vague thing like regulatory and promotional institution, but I essentially talk about RBI. So, let us call this RBI. Now, RBI was established on 1st April 1935, many years back. Definitely not me, many of your parents probably were not even born in 1935, many years back. RBI was established on 1st April 1935 with private shareholders, very interesting, with private shareholders, and so just like US or some other country, the Central Bank of India was founded as a with private shareholding a company, but there was an act which was passed by the British government called Reserve Bank of India Act 1934. So, in 1934 the act was passed, in 1935 Reserve Bank of India was founded on 1st of April. Now, it remained with private parties, shareholding etc., but then the Britishers left, the country changed, and we slowly moved towards a socialist system. Our 5-year plans, a typical Russian copy. Russians introduced that plan in 1920s, 70s, 5-year plans. Stalin, after the revolution, when he came to power, he introduced that 5-year plan. We copied that. We have a huge public sector. That is also a copy of the Russian model. So, the central bank naturally after independence, which was in 1947, in 1949 RBI was nationalized. So, we did not remain like US or other countries where the central bank can be in the private sector, which some of you asked the question probably. And then it became the central bank, it became a central bank primarily, I mean it was just not a bank, it became a proper Central Bank of India. So, what do you mean by that? I am going to come to that. Before I come to the functions of RBI as a central bank, which is comparable with the functions of a central bank anywhere else, and functions of RBI as a non-typical central bank, which in India we have, in other countries central banks do not do that. So, I need to talk about both the traditional functions and the non-traditional functions of our central bank. So that you know, if you study the central bank of another country, what you would expect. What kind of functions, which are under traditional central bank functions. And I need to talk about also the non-traditional functions, all right. Now, the central bank has an administrative structure as follows, like we have the director, the deputy director, the deans, then the registrars, various registers are here. Then the register function in a university is very different. It's like the dean's office. They don't have dean usually in Indian universities. Then you have the head of the departments, etc. The RBI is managed by a central board of directors, it has in capital letters. RBI has a central board of directors, and they have 4 local boards of directors in various cities like Mumbai, Bombay, etc. 4 local boards of directors. One is the central board of directors sitting in Bombay. One are the local 4 boards of directors, and a committee of the central board of directors also. There is an important committee. Now, usually we do not talk about the local board of directors or the committee, central board of directors committee, which manages RBI functions. The central board comprises, that is the main thing we usually talk about, the central board of directors, where the nominations come from the government also, they self-appoint also, etc. There is the famous governor, RBI governor, who is the boss, top boss. Right now, there is an ex-IIT Kanpur student, alumni, who is the governor of RBI. Now, 4 deputy directors, 4 deputy governors, they are also on TV from time to time, and 15 directors nominated by the central government. There are various directors nominated on the, not like IIT Kanpur having 1 director. They have a governor, then 4 deputy governors, then 15 directors which are nominated by the central government. This kind of a structure they have, main administrative structure. Now, having known this is just for the sake of it, some fun to know how RBI is structured. Let us go into the thing we need, the economic functions. So, let us talk about the traditional functions which you will find common across central banks of the world. You go to the American Central Bank or the Mexican Central Bank or the British Central Bank or Japanese Central Bank or whatever, these functions are common. So, they are called traditional functions. So, let us talk about the traditional functions. Traditional functions. The most important traditional function that any central bank would perform is required to do, the first and most important thing is the currency authority. Is the currency authority. Now, there has to be an authority, either government or some institution, who legalizes, takes care of the currency printing. It cannot be in the hands of private companies and they can do whatever they want to do. How much currency to be printed, what will be the features, properties of the currency. Recently, we had a huge problem, there were fake currency problem pumped in through Bangladesh, Nepal, etc. by other countries. And I have one fake currency, I kept it. It was supplied to me by our state bank. They denied it later. I kept it in an envelope as a souvenir. I won't be able to detect it's a fake currency. A shopkeeper detected that and told me, sir, ये fake currency है. It must be 500 rupee असली note नहीं है. So they had to have lots of, security arrangements for currency. So it's secured, it becomes secured because your enemy countries are trying to print them and pump into the economy to destabilize the economy. Bangladesh and Nepal are the usual routes I have heard. So, I come from a state which should be more vigilant, but it requires central government forces. So, they keep on blaming each other. State government says, how can we protect such a long boundary with Bangladesh, and the state government helps us, etc. All right. So, that is a huge problem. So, the currency, you have already heard this before. RBI is the sole issuer of Indian currency, except the 1 rupee note, which we do not have anymore, and coins. Because if you take a coin, there is no RBI mentioned, you will see. Only Ashok Stamba is there and the amount on the other side. We call the Ashok Stamba side the head when we toss the coin, and the amount, which is 50 paisa, 1 rupee, 2 rupee, 25 paisa. When I was born, there used to be 1 paisa coin, nickel coin, brown colored. 1 paisa coin used to be there. There used to be 5 paisa coin. There used to be 10 paisa coin, then 20 paisa coin, then 25. When I joined IIT, slowly all that disappeared, only 25 and 50 paisa coin remained. 25 I do not find anymore much. I see some 50 paisa coin still around. Except coin and 1 rupee note, if you ever have a look at the 1 rupee note, it is very different from any other note that we see in this country. 500 rupee note, 100 rupee, 50 rupee, whatever. It is very different. The issuer is the finance ministry. So, we have a split issuing of currency in India. Bulk is from RBI, but a part is from the coins primarily. 1 rupee note does not exist anymore. It is coming from the Government of India, Ministry of Finance, Government of India. Now, all notes and coins in India are legal tender. You understand legal tender, it is a fiat money. Legal tender, tender means submission. Tender your resignation. I tender my resignation from IIT Kanpur, all right, or to IIT Kanpur. I decided to resign from IIT Kanpur and go and work somewhere else. So, the word English language is I tender, I submit my resignation. Now, legal tender means legally you can submit it during a transaction and the other party is bound to accept it, unless it is another country, of course. It is not a legal tender if you leave India and go to Nepal or Bangladesh or Pakistan or Sri Lanka or US and say, "Arey, ye to legal tender hai, humko ek bottle coke chahiye." Who cares? Whose country's legal tender is this? It is not our country's legal tender. So, it is a legal tender which we call fiat money also. And interesting thing is that there is a concept of unlimited legal tender and limited legal tender. That means, when you submit that in a transaction, the other party may refuse beyond an amount, say I am not going to accept so much of that legal tender. So, they can say that I do not require, I will not accept a huge amount. Suppose I am repaying a loan of 1 lakh rupees, which I borrowed from somebody. A bank can say at the time of repayment of loan, bank can say I am not going to accept so much of that particular currency. Now, what is that unlimited and limited legal tender? Well, I do not know whether it changes. Sometimes it changes. RBI small rules change and it is very difficult to keep track. When I prepared the notes a few years ago, I was opening up books on RBI site and all that thing. I found 50 paisa coin and below 50 paisa coin have limited legal tender. That means somebody can refuse to accept so much of 50 paisa. 1 lakh rupiya मैं वापस कर रहा हूँ in 50 paisa coin. एक sack में ले गया. He can say, I refuse it beyond an amount, whatever amount he chooses. So, that is limited legal tender, limited amount they can accept. And unlimited legal tender is anything else. So, you can imagine, according to law, I have taken 1 lakh loan, I can return it in 1 paisa coin, 1 rupee coin currency. because it is unlimited legal tender by law. RBI has made it. So, that is also quite a headache for somebody to accept that. I gave you some money, you are returning it 1 rupee coin. I say, ये तो legal है. अरे, लेकिन होता नहीं है. There is an understanding. Usually, we don't accept it. We don't do it. But by law, that is unlimited legal tender. All right. Now, the question is, if you come to RBI, the topic is RBI, it is the Bank of India. Look at the structure within RBI, how this money is handled. This is very interesting. I would make reference to 2 important departments in RBI. One is the issue department, I will show you some data also. Issue department, and the other one is the banking department. There are 2 departments of RBI which are interesting, which does deal with a lot of things that we have to talk about in this course. Issue department and banking department. Issue department and banking department. Now, the currency that I am talking about, currency authority, that I am the authority to issue currency, not only manufacture them, but put them also. RBI does it. There are a role of 2 departments here comes. The issue department issues currency. Under law, they must be backed by assets of equal value comprising of gold coins, gold bullion, foreign currencies and Government of India securities. Gold coin, gold bullion, gold bars, etc., chunk of gold, gold bullion, foreign currencies and Government of India securities. So, when the issue department issues currency, 10 rupee note, 100 rupee note, 500 rupee note, whatever, 1000 rupee note, they have to be backed like an asset and liability of 2 sides of a balance sheet. If currencies are a liability, which is of the RBI because they issue it, and if you open a currency, as I told you in class, you will say that this is backed by or guaranteed by the central government and RBI governor, etc., then that is the liability. So, it should be backed on the asset side equal value of gold, gold bullion, foreign currencies and Government of India securities. That is why deficit financing can be handled or is an instrument or a function which is a legal function that can be carried out, an activity carried out by the RBI or the central bank of any country. What is deficit financing? Deficit financing is RBI does not have government's money, RBI does not have its own money in the vault, but government wants cash, it is in trouble. It can simply issue, or which is called selling of treasury bills, which is called Government of India securities to RBI, and RBI by law or central bank by law legally will have to exchange that for hard currency. And where is the hard currency coming from? The currency would come simply from manufacturing them, which you and me cannot do with respect to a transaction with a bank. In a transaction with a bank, I cannot tell the bank, here is my security and give me cash. भागो पागल है क्या? Bank बताएंगे. The government can go to RBI and say, here are the securities, I need cash, give me cash. They say, we don't have cash. Government would simply say, I come back tomorrow, print them. Print them. That's deficit financing in some ways, printing extra money, which doesn't exist. From air, it drops, which Milton Friedman used to call helicopter money. Like you wake up in the morning, a helicopter dropped a bag full of currency in your backyard. Milton Friedman, I've heard of Milton Friedman. He was a Chicagoan economist, a Nobel laureate, and he used to call that helicopter money. That is, this is as if helicopter has dropped it. From sky, it has dropped in your backyard, and you open and, oh my goodness, I have so much currency. This deficit financing is possible simply because of this simple rule that exists, that provided you have gold, gold bullion, foreign currencies and Government of India securities, you can issue currency any amount. They have to be backed by that value, current value. All right. This system of issuing currency by the issue department is known as Managed Paper Currency Standard. It's called Managed Paper Currency Standard. This issue department thing that I just mentioned is called the Managed Paper Currency Standard. Managed Paper Currency Standard. All right? Managed Paper Currency Standard. Issue department issues currency using a system called Managed Paper Currency Standard, where there is like a balance sheet. It has the liability side shows currency issued, total amount, backed by on the asset side, they have to show these assets. What are the 4 items? They can use gold, gold bullion, foreign exchange and Government of India securities. Now, after they have issued them, that means they have legally declared this is the currency we are ready to put into the economy, issue department's job is over. It's very interesting. This is now goes, that currency goes to the instruction goes to the banking department. Then the banking department is the one who puts the currency in circulation. Okay? Now, how is the currency put into circulation? It may be pushed, depends how the currency is put into circulation. If the Government of India is borrowing, it gives it to Government of India and Government of India starts spending, goes into circulation. If banks ask for it by handing over foreign reserves, okay, then it goes to the banks. So, it depends, various routes are there like exit points from RBI, like a drain, and the fresh currency goes into the system. All right, this is how it goes. But this job is done, very interesting, by the banking department, who doesn't have to do any accounting. It has been taken care of by the issue department, and banking department simply have to do the manual part, the mechanical part. So, when Government of India wants to borrow some currency, what happens is it doesn't go to the issue department. It goes to the banking department, the request. Banking department knocks on the issue department and says this is the amount they want. Issue department checks what it has, takes care of it, the legal part of it, whether enough Government of India securities have come, the amount they want, or foreign exchange has come, or gold bullion has come, against which they are going to change it, convert it into Indian currency, and it's over. Does that work? It's over. So, banking device is like a PA, personal assistant to the issue department, who has the main job. Similarly, when RBI Monetary Policy Division decides, now we are going to go for open market sale of securities. Why? Because our monetary policy is going to be a tight monetary policy, because by selling securities, by RBI sells securities, you and me and banks etc. buy them, the money is squeezed out from the system into bank's locker, RBI's locker. Okay? It's called a contractionary, a tight money policy, open market sale of securities. Who does it? Issue department doesn't. This is done by the banking department. So, banking department has a whole lot of very important functions to carry out, not only to pump in fresh currency, but also when open market operations come, which is a standard monetary policy instrument in most countries. All right, it does it. Now, how it does it is different. It starts acting like an underwriter, announces it, sales of securities, amount. It can give the job to the primary dealers these days, who are appointed by the RBI to do the underwriting job. It sends out the notices to various buyers of securities like banks, non-banks, companies, etc., public at large, and then the job is done. What is the banking department headache? Monetary policy is executed by the banking department. Issue department main headache is to the currency minting. So, the mint is under their control, where it's manufactured, etc. So, I will show you some data about issue department balance sheet I have, but I will not do it now, I will do it later. Data would distract you from the conceptual part. So, I do the conceptual part the way I am doing proceeding with this course, and then I come to the data at the end. Next, a very important, second most important function, currency authority, then government banker. Government banker, very interesting. What you're saying is that who is your bank? Who is your banker? The commercial banks, right? A company also has the banker as a commercial bank. But government doesn't usually consider commercial banks to be its banker. Both the state government and the central government in India, in a federal structure like ours, both the central government and the state governments don't consider commercial banks to be the banker. They may do some business with SBI, which has literally become, although it's a commercial bank, it has become like a right hand of RBI. It has reached, it has acquired that status. It may do some business with State Bank. I really don't know, because I've never been part of a finance ministry or something where I know what goes on. But what I found was very interesting when I went to Delhi once for an Union Public Service Commission work, UPSC, which conducts the IS exams and selects people for planning commission, etc. I went because they often invite faculty, etc., from here and there for some job. So I went there and I said, they asked me, would you like to take this, some fee and my travel expenses in cash? I said, no, give me a check. God knows why I said check. I had no interaction, prior experience with government. It's a government body, UPSC. And the check came very interesting. In Delhi, UPSC writes a check in favor of a bank which I never heard it existed. Some of you may know. It's not SBI. It's not the banks you know. It's called Bank of Maharashtra. First time I came to know Bank of Maharashtra, I never lived in Maharashtra, I never lived in Bombay, I never heard of that bank. I never saw that bank in Calcutta. It's called Bank of Maharashtra. UPSC in Delhi writing a check, not UPSC in Bombay. And then God knows where the Bank of Maharashtra office was. It took a month for the check to clear. Anyway, it's another story. So, government departments may have various banking transactions, but government proper, state governments and central government, their bank is central bank. So, what do they do? RBI as a banker to the government, it does the usual banking operations, commercial banking operations like open an account, accept deposits, remit funds, draft banker's check, etc., provide checking facilities. It does all those functions that you find a commercial bank doing for the public. Central Bank of India functions like that for the government. Deposit accept करते हैं, checking facility देते हैं, remit करते हैं funds, whatever, all right. But the interesting thing, that is the usual, all right, okay, something new, that as a bank, if you call it is my bank, they are supposed to do those commercial banking activities. But the most important part here is, as a bank to the government, which a commercial bank being a bank to a public like you and me, to a person, individual doesn't do, is that this banker to the government, the central bank, carries out or performs a few very special functions for the government, which come under traditional functions of a central bank. Nothing uncommon about it. Every country does it. Every country's central bank do it. Okay. So, what is that special functions which are not offered by a commercial bank to you and me if we open an account? Number one, they have created something called ways and means advances, which is a method that they use these days to fund or finance temporary government deficits. So, as a government banker, it deals with ways and means advances, WMA it is called, ways and means advances. The ad hoc treasury bill is over. They have 91-day bill, 182-day, 364-day. In addition to that, they also have 3 months advance, etc., like a loan when state governments or central governments need cash, called ways and means advances. They have created that. Once they wind up the ad hoc treasury bills, which was becoming notorious, because ad hoc government was misusing that facility all the time, but they have replaced it by something else very interesting called ways and means advances. This is managed by as a banker. If you have a family at home, the salary you earned suddenly got exhausted on 20th or 24th of the month. You have 6 more days to wait or 7 more days to wait before your salary comes. You cannot go to the bank and say, give me ways and means advances to tide over my deficit at home. But government can do that. Government maybe have to wait for 2 months for tax revenue to come in. They're short of cash. They don't want to sell treasury bills just for these 2 months, because the treasury bill is 90 days minimum order, 91 day or something. So, what they can do, they can ask for ways and means advances, and this is done by the RBI as a banker. It's very interesting. So, government has extra power when it enjoys the facilities offered by a bank like the central bank. But just remember, these temporary advances like ways and means advances which are given to the state government are often subject to certain conditions. Ways and means advances to the central government is often an open door policy, any amount, much more free. But ways and means advances to the state governments is sometimes a little bit restrictive. RBI differentiates in their treatment of state governments vis-a-vis central government. Give you an example. The state governments are subject to certain qualifications, my note says. Advances can be without any collateral. So, state government can take a loan, 2 months, 3 months loan, without giving any assets or security deposit or showing some collateral as security. Like, I am trying to build my own company, I show my father's property as a collateral and take loans against it from a bank, cash. Advances can be without collateral, which is great news, like a central government which does often. Advances can be made against the pledge of GOI securities, Government of India securities. So, state governments holding Government of India securities can show that to get advances. In the past, they invested there. Now, they show it as a collateral, as a security, valuable to RBI to get some temporary loans. They can do that. There are often special advances when, say, there is a natural calamity in Assam going on. Assam government can ask for special advances because there is a whole lot of extra expenses now. All right, the state is in terrible shape right now. The other day they had a satellite picture of how much of the state is covered with water. It's unbelievable. Large portion, 50% nearly, covered, with flood water. So, special advances can be given to state governments, but that case has to be made. Then only RBI agrees to give the special advances. And also there are interest rates, various kinds of interest rates, etc. Often it is determined by the bank rate that is charged on these advances. These are not interest free loan, these are with interest, but what kind of an interest they would ask also change from time to time. Often the guideline is the bank rate. I am coming to bank rate. What is bank rate? Bank rate is the interest rate of the central bank essentially. Commercial banks have interest rates, two types, you know, deposit rate and a lending rate. There can be structure of deposit rates, savings account के लिए, fixed deposit account के लिए, ये सब ठीक है, broadly two groups, and lending rates. Central bank usually has one interest rate called bank rate. But when it comes to ways and means advances, they sometimes charge different interest rates, but they are in proportion in relation to the bank rate. That does happen. Now, before I go to the other part of ways and means advances and functions of central bank as a banker to the government, and government I am using in a singular word, but government has two types of governments in India, for instance, the central government and the state governments. Look, I am not talking about the municipalities, I am not talking about local government. RBI usually does not have any interaction with local governments or panchayats. These are also part of the government structure, governance structure we have in India. I am only talking about state governments and central government, all right. What I would do, I would close it today.